Good morning. I figured I would do a little video on strategy while waiting for unemployment claims, and on also patience and what to watch in the market, and actually what to give you a sign that the market is actually going to do the things that it does. And a little bit of prediction. So let's start with yesterday's price action. So yesterday, overnight, London Open, massive sellout, right? So you can expect that all these, once the low was broken, previous day low, intraday low, New York low was broken, it just led to the distribution of orders. First and foremost, the volume itself showed a spike. It did not show a descending volume showing distribution. It showed a spike. So the spike in volume right off the bat is a sign of reversal. Most spike, if the volume after is below the spike, it is likely a distribution. So we have our first low of the overnight, and the volume is depleting. So at that point, you have a consolidation because the volume is equalizing now. When the volume is equal, it is likely to be in the accumulation phase. So from that point, we have pre-market NYSE that opens. Now the reversal is on, right? So because it reversed in pre-market, all the intraday traders and retail traders that can't really play the contract options are not in the market yet because it's pre-market, right? So we rallied, created a lower high, and then at the bell, we come back down into a sell-off. But it had to manipulate some type of highs. So the volume increased, obviously, and all the orders are being filed. And in all of these orders, they're filed into a trap. The trap is likely a fill of a gap that this overnight sell-off has created. So now the price rebalance itself, it eats some liquidity to reverse, right? Like you can see that's the highest block that it was left through sweeping this liquidity. So now the imbalance is filled or partly filled. It needs a retest to catch all of the morning orders that entered at the lower weekly expected move, which is where it is considered a put wall. So now on the retest, came back up, resistance, lower high, comes back down, traps all the buyers, the early buyers, which is why you need to wait for the retest. Always wait for the retest. I'm going to show you more example of waiting for the retest, but always wait for the retest. If you're a buyer, you're going to look for a higher low every time. You're going to look for a higher low, and you're going to look for a volume that's going to not be equalized. That's going to show you that there is a distribution in formation. As you can see here, each volume candle, these are equal volume. We are stuck at the resistance, and then it starts falling, right? Now it falls, but after it breaks the support or a soft support after the sweep into equal lows, which could be considered higher low, but ultimately it is an equal low. Equal lows are double bottom. Double bottom is a reversal bullish pattern. The volume correlates and turns bullish, and then you have your spike that shows you that the volume has shifted. Now it shifts into higher volume, and it creates a higher high off the previous swing high, which was a lower high. And the volume continued distributing the highs all the way till the end of the day. But basically, yesterday was very easy to catch if you were patient. If you were early, you were caught in a very manipulated market that needed liquidity and needed buyers. They needed to enter more position. Usually, when this kind of price action happens after a sell off, that means early buyers came in and then they had to enter more to increase the size of their position. The same way I played yesterday when I increased the size of my position, if you look at my previous day video. So, that being said, that turned into the actual trend, the actual distribution, or the continuation of the distribution after the reversal until the end of the day, where there was a reversal, failed to create a higher high, but it created an equal high. Now you have another double top into a sweep. It swept the area where the highest peak, you can see these candle. This one is equal to these bodies, right? So ultimately, this was the value area high, but there was some buyers in this area, and then all the way to the top of this candle. Now the retest entered these two areas above the value area high into a reversal, long wicked candle into a hammer. And now you have a slight divergence in volume, which led to a retest again. That's why you always wait for the retest. If you entered here, somewhere in this candle on the retest, if you had your order over here, you were pretty much triggered in the market. And this is basically called an inducement. It's it's the sweep of a lower area where the price comes back to sweep the liquidity that's over here and the orders so that it can reverse into the trend after consolidating. So that's where most people fail, is they would enter over here, or they see, oh, this is a doji candle, this candle's closed below, we're going to come back down, we failed to create a higher high, equal high, let me short it, and then they get stopped out on the reversal. And then that's when, after this candle broke the highs, you see a big bearish candle after, because everybody that was short is now stopped out because they had their stop over here, right? They could be stopped in these wick, but ultimately, I mean, it's more likely to have an impact in this area, so it leads to a bearish candle. That's why every single one of those candles led to some type of bearishness. Now there goes another retest, which is another inducement, and the inducement goes into the top range of this candle. So now we're at a higher value of the price action from the day before, which is continuation, right? That shows you continuation of the trend. And the trend goes all the way back to point of control, POC. There's another sign that you could you could see from the equal low is this is the NYSE tick chart. This identifies the amount of stocks that are going up or down within the indices. It's a very cool indicator that I like to have because I think of the market like a boat, and the boat basically is is teetering from front to back as far as how many people buy or sell. So if everybody buys, obviously the boat will teeter towards the front. If everybody sells, the boat will teeter towards the the backside. So this is exactly what happened. You had a neutral kind of neutral battle between bulls and bears, and then whenever it was time, everybody went to buy. Once it reached the equal low, all the orders enter into multiple stocks, which led to a higher tick, and that led to the trend. It was trending all the way to the top equal highs, which also was equal lows the day before at close. So that is considered resting liquidity that's over here. So whoever was strapped in long and held their long comes back, and now they either exit their position or they get stopped out from the people that actually went short in this area here, in this consolidation here. So that being said, that leads to an overnight continuation of the trend all the way to point of control. Point of control is likely to be a resistance because we're dry on liquidity. It's overnight. There's not enough orders. We're waiting for a news coming in at 7:30. There's many factors why the price would have reversed, but it also created another inducement, right? It's another higher low into an area of liquidity into a reversal. So now if you went short, you're most likely break even. And I guarantee you within the news at 7:30, it is likely to stop you out because the upper daily expected move is at the higher range of the previous overnight. So Asia high. And that is likely to be an area where the price should stop, if not at the upper weekly expected move, which is priced in tomorrow as the call wall. And you can kind of see this kind of signs ahead of time so that you're prepared for a decision to make as to either you hold your trade or you sell your order ahead, because you can cut your losses, right? Like everybody's able to cut their losses sooner and save some capitals. If you see those signs, you know you're right, you know you're wrong, and ultimately it leads to a better understanding of the price action based on retests and market structure. And that's over time you get used to it. And obviously we're above gamma also at this point, right? So why would you short below gamma if we already broke it once with a double bottom and a rising tick? This is likely to be bullish, and the retest is likely to have another continuation of bullishness. Even if the retest is at the end of the day, it doesn't matter. It's still a continuation trend. And now you have confirmation because it closed above 20T. See here, it couldn't like close above, couldn't close above, but it did here again. Now you can say, okay, well, if it closed here, why did it not go? Well, it did not go because that was a true lower high. They had different, the opening price action in the morning led to a spike of short bearish volume into a distribution, and then an equal volume into another spike that reversed the price into another consolidation, which this is equal volume into another spike for a reversal. So the volume tells you everything. The volume, the market structure tells you everything. Fails to create a higher high, what's going to happen? It's likely going to be a downside. Now, as soon as we broke those lows, that's where people were long, started being long here. If they didn't take profit, well, whenever those lows broke, what happened? Everybody got stopped out. And then on top of the geopolitical news that the tanker got attacked and bombed, obviously it adds pressure to the market and it just leads to a sell-off. Now you see buyers came in, bids came in, and it's leading to the same area where we already had like a series of buyers before, which now therefore leads to a uptrend. Now, how far does the uptrend go? I'm betting on the upper daily expected move and the upper weekly expected move because they are priced in already. So I hope this helps, and that's basically market structure 101 and volume. You don't really need you need signs to tell you if you're right or wrong and if you are in a winning trade, because technically if you entered here you're early, but if you entered on this retest you're early, but that's okay because on the next retest you increase position. Why would you not? It's an equal low, it's double bottom, and then it starts going up on the tick at that point, right? Because it did spike. So now you're double size, and then on the retest here, you enter more size, so you increase position, and then this entire trend is at maximum size. And I guarantee you, you could probably enter more position here, and we're going to go right here, so you're riding the rest of the trend at a higher position if you didn't already take profit um, at the point of control, which I did. I took profit at the point of control. I called it out, but I did close my order in this liquidity here. The order from yesterday, I closed it here, and then I re-entered overnight into the trend and closed it again at point of control. So this is one way to increase your capital and know that you are in a winning trade or a losing trade.